we will need to develop the mechanisms on a global basis for gold as the store of wealth to be applicable to, say, Norges Bank, the Norwegian Sovereign Wealth Fund, or CITIC. That's something that's going to have to develop over time. And I think that the default during the period of time that a transition occurs, if it occurs, we'll see the continued dominance of the U.S. Treasury market relative to other securities markets in the world, and the continued dominance of the U.S. dollar as an exchange mechanism, merely because there is no default position.
Gold is considered a haven during market volatility and investment that offers protection against inflation. When the stock market declines, the demand for gold increases, raising prices. Because of this inverse effect, investors may pivot to gold during a recession to protect their assets. According to Rick Rule, the founder of Rule Investment Media, creating a global system that allows gold to be used as a reliable way to store and protect wealth is essential. This system should not only be available to big banks and rich funds, but should benefit ordinary people as well. In a recent interview with Mike Maloney, Rick Rule predicts that during the transitional period, the U.S. Treasury market and the U.S. dollar will continue to dominate the world's securities markets due to the absence of a default position. While there are concerns about the long-term sustainability of the dollar's dominance, a clear alternative currency is still prepared to take its place. The euro is the most likely challenger, but still faces several challenges, including the lack of a single fiscal authority and the ongoing political instability in some Eurozone countries. However, it is essential to note that the U.S. dollar is still the dominant currency, with central banks holding 60% of their foreign exchange reserves in USD. Rick Rule believes that some people are aware of the diminishing purchasing power of the U.S. dollar, yet they still hold U.S. dollar-denominated savings products for liquidity. He considers this a form of option premium. When investing in gold, Rick Rule believes that gold is a safe and valuable asset, especially when the economy is struggling or the stock market is uncertain. Gold has a long history of holding its value and acting as a shield against economic instability. However, Rule also advises being practical and flexible with gold investments. While having some gold for security is essential, he cautions against keeping all your money tied up in gold. When other assets like stocks or real estate become cheaper during market turbulence, selling some of your gold and having cash on hand is more sensible to take advantage of these opportunities. Now watch excerpts from Rick Rule's interview with Mike Maloney. Be sure to watch the entire video and consider subscribing to our channel. Remember to enable post notifications to stay updated on our latest uploads. Thank you and enjoy the video.
I deal with people all the time who, as a consequence of the diminishment of purchasing power of dollars, refuse to maintain U.S. dollar liquidity. I have been through 3 periods where capital markets seized or semi-seized as a consequence of a lack of liquidity. And despite despite the fact that I understand that holding U.S. dollar denominated savings products results in a diminishment of my purchasing power, I do it because I regard the diminishment of my purchasing power as an option premium so that I can have liquidity when there isn't liquidity in the markets. If you, as you suggest, or maybe didn't suggest, but as you do, as I have done, where you have some of your liquidity in gold, you need to remember to be able to sell it. Too many people that have a slavish adherence to gold won't sell it when it has performed as a store of value and other asset classes become cheaper. If you regard gold as a liquid asset, you have to remember in periods like 2008, when you have a 50% decline in major equity indexes, that if you regard gold as liquidity, you have to use it as liquidity. There are too many people who say, I bought gold for $700, or whatever the number was back then. It's now 620. The Dow has fallen by 50%, and you won't accept a 15% loss on your gold to use it as liquidity. It's very important, if you're regarding gold as liquidity, to use it as liquidity. It is great cash, but it's volatile cash if you denominate your living and your standard of living in U.S. dollar terms. People say that the dollar is under attack from Moscow. The dollar is under attack from Tehran. The dollar is under attack from Beijing. That's ridiculous. The dollar is under attack from Washington.
Yes.
We are obviating our own advantage, which is, as you suggest, probably traitorous. The idea that we are actively engaged in diminishing the value of the franchise, were it not so tragic, would be amusing. It's important, too, that your listeners focus on part of what you said, which is to say, in addition to the weaponizing of the dollar, the attempt to impose extraterritorially America's values and political norms, that the damage that we are doing to our own savers by diminishing the purchasing power, the net present value, the purchasing power of the dollar, I think bears note. You will see recent self-congratulatory utterances from the government about the fact that they have brought down inflation, taking credit, I guess, as an example for the decline in energy prices, which they had nothing to do with. And I know I'm going off the reservation here a little bit, but I want to make the point with regards to the deteriorating value of the dollar, that when they make those self-congratulatory utterances about declining inflation, they are talking about an artificial construct, which is to say their CPI, the Consumer Price Index, and they are acting as though that's a cost of living index.
Rule believes that the common currency of the BRICS, Brazil, Russia, India, China, and South Africa, envisioned by China, is meant to supplement the domestic currencies of the member countries. Instead, it would be a settlement system backed by their gold reserves. The proposal suggests establishing a bank where each member country has drawing rights secured by their gold holdings, and the net differences in trade balances between countries could be settled in units redeemable for gold. Rule emphasizes that creating a currency for day-to-day transactions would not be practical, as the amount of gold needed to back such a currency would far exceed the total amount of gold available on Earth. The concept of the BRICS settlement system is a significant response to the actions of the United States, with a particular focus on the weaponization of the SWIFT banking system. However, the United States has at times employed its influence over SWIFT to impose economic sanctions on other countries. Rule expects that some nations have seen this approach as a form of financial coercion and have raised concerns about the reliance on the U.S. dollar as the dominant reserve currency. Some countries, like China, which holds significant amounts of U.S. treasuries, are concerned about the diminishing purchasing power of the U.S. dollar relative to the interest rates they receive on these treasuries. They see gold as a safer, more stable alternative to protect their wealth and assets. Let's get back to the interview.
The common currency of the BRICS, as it's envisioned by China, is not a currency. It's a settlements system. If you were going to have a currency which supplanted the domestic currency of the potential signatories to the BRICS agreement, the amount of gold that would be necessary to back a currency that was a medium of exchange for ordinary citizens in ordinary day-to-day transactions would exceed the value of all the gold on the planet, never mind the gold controlled by China and Russia and India. I think what the sober proposal of the BRICS would be to establish what was in effect a bank with their gold reserves, where the individual companies had drawing rights secured by their gold and settlable in gold, so that the net differences at the end of a quarter, as an example, in trade balances between Russia and China could be settled in units of exchange that could be redeemable for gold. I don't think that any rational person would propose the cancellation of the ruble, the rand, the yuan, and have these BRICS, have this currency effectively buying candy bars in Moscow or liters of gasoline in Beijing. I think the rational proposal is to have it, rather than as a currency, a system of settlements. I think it's being caused to occur as a reaction to the United States, the weaponization of the SWIFT banking system, and the fact that countries like China, that still have over $1 trillion in U.S. treasuries, understand that the deterioration of the value of the purchasing power of the U.S. Treasury relative to the interest rate that they get paid means that they're suffering a 3.5% annual diminishment in their purchasing power by holding U.S. Treasuries. I can understand from their point of view, in the scope and scale of the size of their surpluses, that they would rather hold gold. It also protects them from the extraterritorial imposition of U.S. will. I'm not defending the actions of the Chinese state or the Russian state or the Iranian state or the South African state or the U.S. state. But I understand that from their point of view, a multipolar world is preferable and probably more stable than a unipolar world, particularly when the people who control the unipolar world are, at least unofficially, declared enemies of yours. I can understand from their point of view why they would want to do that.
Gold is expected to be a safe investment during uncertain times, with demand increasing when the stock market declines. This is because gold is not tied to any specific country or currency, and its value is not as volatile as other assets. As a result, gold can often hold its value or even appreciate in value during times of economic turmoil. Do you believe that gold will continue to be a reliable investment during uncertain times in the future? Please share your thoughts in the comments section below. If you found this video informative, remember to give it a thumbs up, subscribe to our channel, and enable notifications to stay informed about our latest videos on silver, gold, and copper. Thank you for watching, and we appreciate your support.